you had a choice between maximizing your crypto wealth or making an unnecessary charitable donation to the IRS, which would you pick? Crypto profits are great. Overpaying in taxes? Not so much. So in today's video, I'm providing you with a strategic blueprint to conquer the crypto tax maze, a meticulously crafted approach to ace your 2024 crypto filings by April 15th, 2025, while also positioning you to outsmart 2025's crypto obstacles. Whether you're a sharp 25-year-old trader or a seasoned 65-year-old hodler, this video will give you the edge to maximize your crypto profits and hopefully minimize what you owe. So settle in and let's take control of your crypto wealth. One of the most confusing and crucial topics every investor faces each year is filing their taxes. For crypto investors, calling it merely confusing is like calling a bull run a slight uptick. Incredibly inadequate. That's why in this video, I'll be covering the questions you should be asking to vet your CPA, the documentation you should gather prior to filing, and most importantly, provide insights on how to legally minimize your government dues. And as an added bonus, I'll be sharing with you my free crypto tax template to keep you better organized and prepared throughout 2025. More on that a bit later in the video. So filing crypto taxes. The key here will be to elevate your strategy with precision. Investing in crypto is a way to financial freedom for so many, but the IRS has been treating it like their personal piggy bank. They classify it as property, not cash. So picture your Bitcoin as a digital trading card without all the nostalgia. Every trade, sale, or staking reward in 2024 is a taxable event. Bought Bitcoin and cashed out in under a year? That's going to result in short-term gains, taxed at your day job rate up to 37%. HODL for over a year? Long-term rates would apply, 0 to 20%, a much gentler hit to the wallet. But here's where it gets a little more intricate. Mining, staking, and airdrops? That's all classified as reportable income, taxable the moment it lands in your wallet. Swap Bitcoin for Ethereum? That's a taxable sale, not a casual, "Don't worry, I got this" between friends. Record these transactions diligently or brace yourself for an unpleasant fallout. The IRS isn't just idly watching. They're armed with blockchain analytics and a very clear agenda. Just look at Bitcoin Jesus, Roger Ver. He dodged taxes, got nabbed, and now faces decades behind bars. To reiterate in the simplest of terms, pay what you owe, but not a Satoshi more. If you're watching this video, you're just in time to file 2024 right. First thing we need to do is gather your crypto life story. Every buy, sell, trade, and reward needs a receipt. That should include date, amount, and USD value at the time. Your wallet's a war zone, so grab your transaction history from Coinbase, Kraken, or your DeFi playground of choice for the past year. Tools like Coinly or CoinTracker are helpful software tools because they sync all your accounts together in one place. Use caution when sharing such personal information. I'm not endorsing or sponsored by either one of these software programs, so of course DYOR and use at your own risk. Now, if you prefer the old school route, you can easily track all that beautiful information within your own customized template. Make sure to include date, type of transaction, amount, price, and a note section. And don't forget to be as descriptive as possible. In the second step, we actually need to do the math to get an idea of where we stand with our crypto taxes. Say you bought one Bitcoin for $50,000 and sold it for $100,000 in 2024 after holding it for over a year. That's a $50,000 profit with about $7,500 in tax at 15% for most people. To calculate profits, start with the first crypto you bought and work forward, unless your CPA says you can pick specific ones. FIFO, first in, first out, is an IRS-approved method for calculating crypto gains. Meaning, when you sell crypto, you assume you're selling the oldest coins you bought first. For example, if you bought one Bitcoin at $50,000 in 2023 and another at $60,000 in 2024, then sold one Bitcoin, FIFO says you sold the 50K Bitcoin and your gain is based on that cost. During this second step, you'll also list every sale on Form 8949, add up up profits on Schedule D, and report income on Schedule 1. And here's just a little heads up for 2025. Centralized exchanges will send a new Form 1099-DA, DA standing for digital assets, showing your sales. And here's where we get into step 3, tackling losses and hacks. Did a squirrel, frog, or chicken meme coin you invested in tank in 2024? If you sold by December 31st, 2024, you locked in that loss for tax purposes and could rebuy right away. Crypto still managed to dodge the wash sale rule for 2024, unlike stocks. And if you held that wild degen investment for over a year before selling, you still scored lower long-term tax rates even if it stayed in the green. Now here's a bit of a pro move. HIFO, highest in, first out, lets you assume you sold your priciest coins first, shrinking your taxable gains. For instance, if you bought Bitcoin at $40,000 and $60,000 and then sold at $70,000, HIFO uses the $60,000 cost, cutting your gain from $30,000 to $10,000. Now, you don't need to be using a CPA to pull this off. You can do it yourself, but the IRS demands thorough records to use it legally. That means tracking every purchase with exact dates, amounts, and USD costs, then proving which high-cost coins you sold for each transaction. Again, software like CoinTracker can help, but if you're more of a manual person, list it all on Form 8949 with backup proof. Sloppy details could trigger a crypto audit. Back in 2024, it worked only if you had that precision locked in. Didn't know about HIFO last year? Start tracking every buy and sell now. Tell your CPA or set a reminder for yourself to prep HIFO for 2025 taxes, so you're not stuck with bigger gains in the coming year. Let's address the now. Good old 2025. Things are starting to shift for crypto taxes. Personally, I like to take the optimist view and believe great things are ahead, as long as you have a plan. As mentioned earlier, as of January 1st, a new Form 1099-DA took effect. Exchanges like Gemini, Coinbase, and Kraken will report your 2025 trades to the IRS, breaking it down wallet by wallet. No more tossing everything into one pile. To stay ahead, take a quick snapshot of every cryptocurrency you owned on December 31st, 2024. How much you paid for each coin, wallet by wallet. If you don't, the IRS might assume you sold your oldest coins first, which could mean bigger taxes in 2025. But here's some good news. As crypto investors, we're getting some breathing room with the new tax rules for crypto exchanges. Back in 2021, Congress passed a law saying brokers, think big exchanges like Coinbase or Gemini, have to report your crypto trades to the IRS, just like stockbrokers do. Originally, this was set to hit hard in 2024, but it's been delayed. Here's what it means. For anything you sell in 2025, exchanges won't tell the IRS about those sales until early 2026, when they send Form 1099-DA for that year's taxes due April 2026. And the price you paid for those coins, your cost basis, won't get reported until early 2027 for your 2026 taxes due April 2027. But don't assume exchanges like Coinbase will send you or the IRS a neat summary of your 2025 trades and costs yet, like a stockbroker might. We will all still be responsible for tracking everything ourselves for 2025 taxes, just as we did for 2024, because the new reporting rules haven't fully kicked in yet. And what about DeFi and NFTs? Well, the IRS is sharpening its focus there as well. Unlike centralized exchanges, decentralized platforms like Uniswap and NFT marketplaces like OpenSea don't custody your assets, so they're not classified as brokers under these rules. Yet. That doesn't mean you can ignore these investments for tax purposes. Every action on the blockchain, trades, swaps, NFT purchases, creates a public record, and the IRS is becoming increasingly more adept at analyzing it. The IRS is using tools to link wallet addresses to your identity, especially if you've ever touched a regulated exchange. That means your 2025 DeFi profits or NFT flips could still land on their radar even without a form. The bottom line, keep records of every move because they're catching up fast, and we want integrity represented strongly in the crypto space. The IRS may have your DeFi movements under a microscope, but here comes 2025's crypto wildcard straight from the Oval Office. As we all know, Donald Trump is back in office, and he's all in on crypto. He's continuously talking about a Bitcoin reserve for the US, and also wants to ditch capital gains tax on Bitcoin and other cryptocurrencies issued or based in the United States. Imagine this, you buy a coffee with Bitcoin, no tax hit. I personally would never give Starbucks my Bitcoin, but if these changes were to happen, crypto isn't just for holding, it's now spending money. But before we get ahead of ourselves, let's remember Congress still has to agree. So for now, here's your move. Write down everything you do with crypto in 2025. Every trade, transfer, staking reward, document it all. The IRS in 2025 won't let messy records slide, so keep it tight. Okay, so here's the fun part. As a crypto investor, you need to be ready to vet your CPA like a crypto pro and secure your gains for 2024. If you walk into your CPA's office clearly knowledgeable about how crypto profits work, don't you think your CPA is going to be a bit more motivated to look over your investments with a fine-tooth comb rather than someone who comes across completely clueless and probably wouldn't even notice if gains were wrongly represented? That's why I suggest you walk in and own that office. Start off by asking, I paid a $50 fee on Coinbase to trade Bitcoin. Can I write that off? A top-tier CPA knows it's deductible, tacked onto your cost basis, or a Schedule C expense if you're a trader. Then raise the stakes a little bit. Say, I also lent ETH on Aave. How's that taxed? An educated crypto CPA would ace this question by saying, based on its fair market value, say $200 if you got 0.1 ETH at $2,000 each, and later when you sell that ETH, any profit gets reported as a capital gain on Form 8949. Take your questions a bit further by asking, I got hacked in 2024 and lost $10,000 in crypto. Can I receive any tax relief? A crypto pro would say it's a casualty loss on Form 4684 if provable, so not a total wash. And follow this with another pressing question of, I used Bitcoin to buy an NFT, how's that reported? The answer should be, it's a Bitcoin sale at fair market value. The NFT's cost basis is that fair market value. Want more questions to vet your CPA? I've got 15 killer questions to grill your CPA, plus my 2025 crypto asset tracker template to stay organized for next year's filing. To receive this freebie, all you need to do is like this video, subscribe, comment Crypto Cash below, and make sure you're following me at Amy Lives Crypto on X. I'll DM the full stash for all those who are subscribed and following by April 15th. But don't wait until the deadline. Get started today. There you go, your 2024 Crypto Tax Blueprint primed for April 15th, 2025 with a head start on 2025's twists. Outsmart the IRS, prep for Trump's Bitcoin dreams, and keep every Satoshi you deserve. You're not just surviving the tax game, now you're winning it. Thanks so much for watching. Like, subscribe, comment Crypto Cash below, and follow me at Amy Lives Crypto on X for your free 2025 tracker template and tax questions. And as always, stay curious, stay informed, and stay tuned for more crypto news and education.